All right. Good afternoon, everybody. Welcome to our webinar today. Uh, Glad to have you today. Welcome, welcome. And good to good to see everybody. Con, welcome from beautiful Calgary, and Wayne from Long Island. Beautiful. Good to see everybody. Beautiful Tampa. Tampa, that's a beautiful area. They're all beautiful areas, aren't they? Um, Glad to have everybody today. And I used to years ago do more. I was just thinking the other day. Um, yeah, hi George. Yeah, been a long time. I was just thinking years ago, we used to do, I don't know if I do it once a week, once a month, I forget, but just for the public and just uh, a way to engage and talk and see how they're doing and talk about trades and stuff like that. And I thought, boy, that was fun. I enjoyed that. And so I'm going to start today. I'm not sure. This is the first one. I'm not sure how many I'll do, if I'll do every Friday, 2 or 3 times a month, but we'll let you know. We'll let you know. And glad you're here today. We have Joe from San Miguel de Allende, Mexico. I've never been. I have no idea where that is, but I'm sure, Joe, it's nice and warm, right? You went from Montreal. Uh, uh, Grown up a Chicago Blackhawks fan. Uh, Montreal, like when I picture the Canadian teams, Montreal is like the and my cohort in crime, Amit from Michigan. Uh, Amit is a veteran, uh, very good trader in our community, big part of our community, and he's from the Michigan area, uh, in the near the city, right? I mean, you're you're not too far from Detroit. Is that correct? And yeah, suburb of Detroit. And yeah, I like Michael's was the best. USSR, Union of Seattle Social. Easy, easy, Michael. We are not a political show in any way whatsoever. And I'm reading it like, oh, USSR. A lot of clever people here. Um, all right. Well, here's what I'm going to at least cover today. And what I will suggest is when we're done today, if you send me, because obviously in here you have people at different levels of trading. I'm not going uh, starting today, what is an option and what is a strike price, even though I think there's a good place for that. There's a lot of good material out there. If you have any questions, you could send me an email, Dan at Sheridan Risk Management, on if you have any questions about anything or if there's something you'd like covered next time. So I'm not sure if I'll do something next Friday or the week after. I'm sure I'll do one of those too. But if you send me any questions you have that you'd like me to cover at the beginning when we meet next time, or any terms or terminology or something that just confuses you, you'd like to talk about, I will cover it if you send me an email, right? You might say, well, Dan, can't you read my mind and just know what I want? No, I'm not. I can't do that, right? I'm not any good at that. So if you send me an email, Dan at Sheridan Risk Management, any questions or things you'd like me to cover in the future, uh, I will do that. If I if if it's something I understand. If I don't understand it or don't know the answer, I will tell you. All right, so today I'm going to cover three things. Big picture, how we in our community look at the world of an options portfolio that'll be relatively quick. And then we'll look at criteria today um, on range bound trading. Now, we do more of range bound trading than any other, but we also do quite a bit of long portfolio. And Amit, who's in there, it kind of leads the charge on that with another student, Anthony. But we'll talk about criteria, range bound, and then we'll look at, okay, today, based on the criteria, so we'll be able to apply what we go over based on the criteria. Is there a trade we might do today, and which trade and what size? And so what am I hoping you get out of today? Maybe a little idea how you pick a trade in the world, especially in the world of range bound. How do you pick a trade? How do you know if today's a decent day to trade? What are some of the things you look at? And how might you pick, a day like today? Do you pick a butterfly? Do you pick a camel? What do you do? Right? So hopefully we'll just at least shed a little bit of light on that uh, uh, today. All right. Does that sound like a plan? How many of you would say that are here? How many of you are beginners or beginner either? I don't have too much experience with a lot of live trades, relatively new to options. How many would say how many would consider themselves a beginner? How many would consider more medium or advanced? Where do you put yourselves? Advanced, intermediate, medium. Okay. I love that one. An advanced novice. How many have heard that one? That like covers the whole spectrum. Now, interesting. Let me ask you a question. Can you be advanced in one strategy and be a beginner in another strategy? Can somebody say, "Hey Dan, I know credit spreads. I'm one of the best credit spread guys in the country, but I wouldn't know a butterfly if it hit me in the eyeballs." Right? So it's a relative term when you ask somebody if they're advanced. Advanced at what? Right? Uh, advanced at, you know, hey, I can read charts well and I'm a good spec trader. That's good. On the range bound, you might say, I've never done calendars or butterflies. So those I'm beginner. So as I'm going over this, we'll get a better feel of at least what we look at. So let's start with, again, three things today. Big picture, uh, criteria for trades, and then we'll pick a trade. So you get at least an idea how we'd look at a day like today, practical. Today, what would you do today? Would you do nothing today? Would you do something today? Do you care? And but one thing I will say is this. I want to encourage you. How many of you, be honest, how many of you be honest that you're chasing this shiny object in the world of options trading? In other words, what strategy can I make consistent income uh, with little or no management, consistent income every week, every month? How much? And then sometimes maybe you'll do that, and that has holes in the armor, and you're on to the next thing. I think, you know, I think like David said, that sounds like me. David, you're maybe more honest than the rest of us. I think we've all, you know, late at night, right? As I'm laying there, you know, after a good pizza, you think, well, there's got to be an easier way. If somebody, these late night commercials where, hey, I turned $2 million into, whatever. Um, you want that, but really, this business is about, it's a craft. You're learning a craft. And once you adopt, to me, it's a lot like Cool Hand Luke in the movie. Get your mind right. If you're approaching this as a craft and you're approaching this, that risk management is key, keeping your losers not too far from your winners, right? and and if we're doing, most of the trades we're doing, we try to get the probabilities in our favor. We do positive theta trades, want trades that decay. Not all of them, but most of the range bound. And it really is that discipline and stuff. But it's also this. I tell people, you know, how do you get to be good at butterflies? The real answer is trading 20 of them, or you need to, you can learn about them, but then it's applying the principles with good risk management. But risk management can sound like I have to learn the elusive adjustment. No, no, it's keeping your losers under control. And see, that's the thing, right? Any of you can do that. You don't have to be an options guru to see if you can read your statement at your brokerage firm. If you pay $1,000 for a trade, do you know when you're down $100 or 10% or 50? You know that. That's public. You know that, right? And you have to get out. But again, like any craft, think of all the things you're learning at the beginning. How to use your brokerage platform, how to put an order in, how to take an order off, how to deal with the emotions of trading. And a lot of beginners trade too big, right? Because the key is, beginners is try to get yourself. My goal always has been in teaching. How do you get someone to last 6, 7 months, right? You know what that answer is? Do everything you can in your power to keep them trading as small as they possibly can, right? Because they don't know anything. If you're making much money your first 4 or 5 months, it's probably not that much to do with you. It's more to do with the market, right? Either you're taking directional plays and you happen to go with the trend up or trend down, or if it's range bound trades, you're putting stuff on in the market's not doing anything, right? All right. You know what I think I'll do? So Patrick is saying, can you explain what a butterfly is spread with another leg? What I would do, I want to start off, since this is the first one, give a little bit of a foundation, and then I'm going to pick one strategy. But if you send me that, Patrick, your question, uh, Strees, how far out, if you want to, yeah, just send me your questions. I will nail all of those at the beginning of the next one. Patrick mostly been selling puts on stocks. I don't mind holding and then selling calls against them and assigned. I'll address that in my overall perspective today, Patrick. But if you'd like me to cover any more of that or anything else, I don't want to start just answering, because these are, do out of the money spreads for income through. Oh, Bill does those. Okay. So, so we will be getting at what works in this market. And I'll talk about that, but I'm going to start with a couple overriding things, right? I can give you an answer. If you just want to leave right away, I can say calendars have worked extremely well the last 4 months, but that doesn't give you a lot of context, does it? What kind of calendar, right? How far out the duration of the shorts? How far out the duration of the longs? Where do you place the short strike? How long are you in it, right? There's a little context. So um, uh, so we'll go from there. I mean, overall, the last 2, 3 months, long Vegas stuff has worked really well, even in the last 2, 3 weeks. Last 2, 3 weeks, calendars, double diagonals have worked extremely well, right? So I will say that. And maybe I'll get into a little bit more of that later. But let's starting out real quick. just so you have perspective, how I look at the world of an options portfolio would be you start with a long portfolio. And I will tell you what you would consider maybe in a long portfolio, and then what we would look at and what we do in the long portfolio in our community. And I think it's pretty neat. And I want to talk about that. So long portfolio is quoting the legendary, uh, what's his name? He's so legendary, I forget his name, Peter Lynch, right? The view of an investor, long-term holder, right? Intentionally long positions over time. Most of this would be in your retirement account, your long stock, right? You have uh, leaps, uh, intentionally doing put credit spreads uh, on a regular basis. And I'm going to get more about those in a second. But two things we do a lot and two things you'd be familiar with. And long portfolio, I would say, is the bridge to get into options trading, right? How many of you got into the options trading through maybe, hey, I have long stock and you learned how to sell a call against long stock, a covered right? How many was that your bridge into the world of options trading? Being that you had long stock, hey, I can sell an out of the money call. And if it doesn't go up too far or too fast, I can make money on the stock and I can collect the premium on the call, right? Or I buy a put against long stock if I'm concerned, market's at near all-time highs right now. And if I buy a put, boy, that can help me or do a collar or whatever. But it's with stocks. And how many of you would say, Dan, I do covered rights or cash secured puts? Dan, I do covered rights. What is covered rights? You're long stock and you're selling on a consistent basis out of the money calls or or you're selling cash secured puts for monthly income. I just sell out of the money puts, cash secured puts. Cash secured just means if you're selling a put for $2 and as long as the market doesn't go below your short strike, you collect the premium, but you got to have enough money in it to buy uh, stock. Now, what do we do in our community? Instead of, not that people don't do covered rights or cash secured puts, they're fine, but we will focus on what's a better way from what's much, 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 much cheaper than a covered right and a much, 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 much better potential yield. It's called two types of names are a long diagonal long diagonal and a uh, poor man's covered right, a long diagonal. And all you're doing is you're taking, instead of buying stock, you're buying an option 6 months out, 3 months out, 9 months out. Usually it's an in the money option as a stock surrogate. Petro, I'm not going to take time for that right now. I love these types of things. If you send me an email, it sounds like I'll have some good emails. I'd like to send me that information. I'd love to look at it, cover it, and maybe talk about it, or at least comment on it. So, and then instead of cash secured puts, I think a much better way to do it is if I'm selling a put for $2 or $3, maybe I'll buy a put at 30 cents against it. You with me? Or 40 cents or more. But these are much, much cheaper ways to skin the cat, right? So that's what we do. And in our community, Um, and I would say spearheaded by Amit and Anthony and a few others. I like them, but the long diagonals are wonderful strategies. And I'm going to be honest with you. I've seen this with my eyes. I'll use other people as an example. I've seen Amit and Anthony and others make more in 1 month in a long diagonal than a typical decent covered right person will make in a whole year, right? And you say, what's the magic? There's no magic. Options are a lot cheaper. And there's also different ways of doing these diagonals. And also you can do these diagonals on the upside, but let me ask you a question. Do any of you have good stocks in your retirement that ever go down? How many have stocks in their retirement that never go down? Anybody? Probably if you did have one, don't tell us, right? Keep it to yourself. But the answer is stocks go down. So you can do, particularly Amit would be very good at diagonals for the downside, right? Um, how do you, we, now you go to, uh, Brandon says, talking about the wheel, I did a course about a year ago on the wheel. How many are familiar with the wheel strategy? The whole wheel strategy. And the wheel strategy is basically saying, I like XYZ stock. I'm going to sell puts every month uh, to get monthly income, right? That's it. That's my life. I want to get monthly income, but it's a stock I like. If its stock goes down 5 to 8% below the short strike of the put, I'll let myself get assigned and buy stock. That short put will turn into stock. I'll buy stock. I'm happy to buy stock. I liked it at a higher price. I'd like it at a lower price. And then if it goes up, you'll sell out of the money calls as it goes up. And then eventually, if you don't roll the short calls, the stock keeps going up. You'll get assigned on your short call, take you out of the long stock, repeat the process again, right? And it's a good strategy. A year ago, I did a course on just this, and doing an all-wheel option strategy, and and that's basically showed you how to do the whole wheel with just options. And basically, instead of the covered right, you're doing a long diagonal. Instead of the cash secured put, you're doing a kind of a wider credit spread. Um, and I think that is definitely something worth looking into. And anyways, so long portfolio, does everybody get an idea what that is? Intentionally long positions, a little bit longer perspective. And so we do a lot of credit spreads and diagonals, right? Doesn't mean that there's not a lot of students who still do covered rights and cash secured puts, but it's a much more effective way, I think, and we think, to do long diagonals and cash and credit spreads instead of covered rights and cash secured puts. So that's what we do in the long portfolio a lot. You got that? Uh, and thanks, Amy. But I think the yeah, and we have like uh, a lot of materials on that. All right, next thing, real quick, on the range bound part of your portfolio. And again, you don't have to do in the three parts of a portfolio, long portfolio, range bound, and spec. You don't have to do all of them, right? I'm just telling you the types of trades that we do. Range bound, probably more, uh, we do more of that. And that would be some type of butterfly. There's different flavors. A butterfly, calendars, these are probably the most uh, popular ones. Uh, I'll put iron condor, but we like to do a lot of double type strategies. Double calendar, double diagonal, double long diagonal, other, a lot of different versions of these combos or double type strategies, but they're range bound strategies. So you're looking for a little bit of a range bound market. We'll talk about that. a range bound market. Um, and uh, we're looking to stay in these range bound trades is a rough idea, about 30% of the duration. So we're looking to turn over the trades almost every week. So if Joe or Mark is trading at $5,000 of option trades, our goal, doesn't mean you can always do it, is to, by doing, let's say the majority of the trades we might do is 10 to 30 days to expiration, even though we do good English. We do some 0 day and some 3 to 5 day stuff, right? And some people may not like to do that. I like to do some of that. I think those are very effective. But the majority might be 10 to 30, 10 to 35 days out. We're looking to stay in about 30% of the duration. So if you're doing a 15-day calendar with or something, I might be in 4.5 days. So if Mark or Joe has 5,000 in there, putting 5,000 of trades on this week and getting it off by next week, they're putting 5,000 to work again next week and the week after. So you have turnover. So you have a much better chance to make a much better yield for the month, right? And because you're putting more trades on, you can absorb losses better, right? So it's turnover. Does everybody get that? Does everybody get that? Owner and others folk are trying a good job at getting Dan distracted because they know Dan can go on rabbit holes and get distracted like the best of them. But I'm trying to stay disciplined today and get through what I wanted to go over today. How many think I can stay with the plan today? How many think I can stay with the plan today? All right. So again, um, I'm going to try. I'm going to try. So also, Joe J was trying the same thing. What diagonal do you prefer? We have a lot of different ones. Uh, we have an out of the money diagonal. Anthony talks about. Amito talk about various there's a lot of different type of diagonals. If you send me a question, I'll try to spend a little bit more. Uh, uh, I'll send you a little bit more information on that, um, and be happy to help you with that. Now, so that's range bound. The next thing would be spec trade. Spec trade is what it sounds like. Hey, I think the market's going up. I think the market's going down. What should I do? Right? Should I do you know, uh, should I buy a call? Should I buy a put? What should I do? That's spec trades, and that'll be a smaller part of the portfolio. This is mainly in our community around earnings. Number one, it could be based on um, if we're looking for more of a move. We do a lot of these reverse iron condors and stuff like that. So these would be um, uh, this would be something that uh, I think works pretty well on the speculative end. Now, so let's get into the criteria. So the criteria is this. Criteria is how do we A, how do we pick what strategy we're going to do, whether we're going to trade today? There's 5 criteria, and then we'll go into a trade. So number one, is the market range or trend? So if we're looking here today, as we find a trade for today, is the market range or trend? If you're looking at the last 10 days, are we more range bound or trend? What would you say? What would you say? Are we range or trend today? We are more, I mean, we're range bound. Tuesday, Wednesday, and Thursday, we dropped 100 points, right? Tuesday, Wednesday, and Thursday, you're down 100 points. And then Friday, we're up, right? So, you know, we're basically range bound, but we're all looking, the market's been down 2%, right? 1 to 2%. And which is normal, right? So it's range bound. But until today, when I was teaching yesterday, I said, I might go a little bit less size. We'll see if this materializes today. If the PCE was bad, we could have gone down and we could have continued this 3-day down move that we didn't. So right now I'm looking at range bound. So that's a vote for, hey, doing a range bound trade today. And um, that's also a vote for trading maybe semi-normal size. Number two, ATR. Here's the average true range. How many know what average true range is? Average true range is just looking at how big are these candles here, right? What's the difference between the high and the low in SPX on a given day? And the higher the average true range, the wider the distances between the high and the low. If you look right here on this day, which was Wednesday, the difference between the high and the low, let me just see here. Wednesday, the distance between the high and the low was 50 points. Thursday, the difference between the high and the low is 60 points. Friday, the distance between the high and the low is about 44 points. Those aren't much. When you start getting big ranges like these candles here, you're getting about 100 points between the high and the low. On this day in July, you got about 100 points between the high and the low. That is very difficult. That is extremely difficult to uh, to navigate through range bound trades there. So we watch these candles. So if you look at right now, as we said, are we range or trend? Range, that's a yes. That's number one. Number two, is the ATR trending lower? We like it when it's trending lower. Uh, that means the range is more under control. So it's been lower, but now it's fine. So that's a yes with the ATR. Number three, has the trend changed? With us going down, for any of you who look at technicals, has the moving averages changed at all? Yes or no? Are we in a downtrend now? What would you say, yes or no? No, we're not in a downtrend. We really haven't gone down. So the moving averages are fine. I'm not finding anything really that bothers me. And number four, today. Is today uh is today a good or a bad? Is today up more than 1.5%? No, it's only a 0.5% move. So this isn't really a big move in the market. So everything looks good. All of these have to do with price. Why do I do four things I look at on price to see if we should trade today? Because price is the most important thing. All of your range bound trades are affected by price and volatility. And if you look at number five, volatility, is the VIX right now in a normal range for the year? 1562. Yeah, it's in the normal range of maybe 14 to 22. So nothing looks out of whack. And the last thing is news, right? News. Any big news, if we put a trade on today, any big news for next week? Any big news next week? I mean, obviously we can't control tariffs or anything like that, but is there any big news for next week? Mike says government shutdown. Any big news? No, there's no like PCE. The PCE was today. There's no CPI, PPI, nothing like that. So news is pretty muted next week unless tariffs come. Employment numbers, we have those every week, right? So based on that, right? Based on that, would we put a range bound trade on today? Yes or no? Would we put a range bound trade on? Yeah, I would definitely put a range bound uh, trade on. And so then the question is, what trade would you put on? What, I mean, you could put all of these range bound trades work pretty well, but what would be one that you would put on? What would be one that you would put on? What would be a range bound trade that you'd put on? Well, let's go. A lot of times we make the decision based on VIX, right? If you look at VIX and we go from a year, let's just go to year. Just tell you how I do it. Let's go a year. The low is 12, the high is 60. Well, what I try to do is get more, what is the normal range here, right? And 60s were in April. That was for 4 or 5 days. But generally, the range, especially if you look, it's going to be, if we bring it down to 6 months, 6 months, you might be 14 or 15 on the high end, but taking away April, you're looking at implied volatilities could be, uh, maybe I would go maybe 22, 23. So 14 to 23. Right now, we might be a little bit the lower end. Lately, it's been over the last 3 months. I'll weigh stuff more the last 3 months, but 16 right now, where we are in the VIX, or 1564, a little on the lower end, right? So if you asked me, would I put range bound trade on today? Yes. If we're in the 15s, and I might put multiple trades on in a week, but what trade would I put on today? I would look at some type of a calendar, and maybe I'll just look at that today. Does that make sense? How we analyzed, we went to the most important thing, because range bound trades, you want something that resembles range bound. Would we put a trade on today? So just give you a trade that I would probably consider. I usually do this on Thursdays. I didn't do it Thursday yesterday because I thought there was a catalyst today with the PCE that could move things a bit, right? But with today out of it, just give an example what one might look like. Here's an October 10, 14 calendar. So we're showing you what trade I would do. We're at 66.41. I would do something like this. We call this a calendar under the market. How many have ever done a trade like this? How many have ever done a trade like this? Anybody? So we're at 66.40. We're up 36 today. I'd look at putting a calendar on at 66.10 in the puts, and maybe 4 wide. You can go 5 wide, you could go 7 wide. So this would be the setup. Let me just set this up. Let me tweak this a little bit. 66. One second. Let's even start it like this, just to make it clear. So here's a calendar trade. Here's where the price of the underlying is, but I'm putting a calendar under the market at 66.20. Let's say 20 points lower. Is Dan bearish? No, Dan's not bearish. my deltas are minus 0.16. That's basically neutral. So because we're up, because we're again approaching the highs, here's something that gives us more room to the downside than a typical calendar. But the market is still in a bit of an uptrend, so we're staying neutral here. Do you see that? So we're giving ourselves more room on the downside. It's a positive theta trade. A calendar is simply for how many have never done a live calendar if they're here today? How many have never done a live calendar? So a calendar is a mixed month trade. You're buying a further out, selling a closer in, same strike. And this is, as I said, the last 3 weeks, this trade has been very, very effective. Um, Extremely effective the last 3 weeks in particular. I mean, just as far as what's working now, calendars, double diagonals type trades, double calendars. But the other thing is you can see here, it's trading at, so this trade 4 wide would cost about $660, right? And the deltas are neutral. So again, with the market having gone up, by placing it a little bit under the market, usually I will do these on up days like this. When we do have a little bit of a down day, we can get these off in 2 or 3 days, a lot of the time, 4 days. So this would be a 14-day trade. We're looking to stay in at 30% of the time. So it's a little over 4 days. So I would look to be out of this by Tuesday or Wednesday next week. I usually put this type of trade on Thursday, but I didn't yesterday because we had a catalyst PCE. Does that make sense? So we've gone over the big picture criteria of picking trades criteria. And then what would we do today? What would I pick today? And today, that's what I was putting on more today, calendars and double calendars. What's the risk of this trade? Your risk of a calendar is your debit. And you're basically looking at these are called expiration break evens. This is your graph at expiration. This is your graph today, right? And you're looking to make maybe 10%. So 10% of $650 here, you can see if we make it 650 would be about $65, right? If it's 650, $65. That's what you're trying to make. And you're basically, as long as we're kind of in the profitable area here, you make money. If it goes outside of it, we may take it off. Maybe we'll call it reposition or reset it, or we might do an adjustment. But so what we're looking at is today, if you look at, let's look at this trade on Tuesday. If you look at this trade on Tuesday, as time passes, this purple line starts dwarfing near the blue line, right? You see that? So if you look at the graph here, you can see you're up, depending on where it is on the graph, this is the theoretical P&L on Tuesday, near $100, 70, $100. Well, is that good enough to get 10% on 650? Yes. Would it be abnormal to put a trade on Thursday or Friday and get it off by Monday or Tuesday? No, it's not abnormal at all. I would say 55% of the time you normally do that. So anyways, that's a good start. Now, if you held till expiration, again, let me just say something before I answer Assad's question. How do you get the probabilities of a count? Should you, like if I say to you, stock is 100 and you're selling an 80 delta put, or excuse me, you're selling an 80 strike put out of the money, or you're selling a 120 call out of the money, can most of you say, Dan, I see how those types of trades, selling a put 20 points out of the money if we're at 100, or 20 points out of the money at the calls, I see how I get probabilities in my favor, right? How many would say that? That, it's out of the money, you're getting some probabilities in your favor, right? But how do you get do you have any probabilities in your favor when you do a butterfly or a calendar where you're selling a strike relatively close to where we're at? How do you get probabilities in your favor when you're selling more at the money strikes? How do you get it? The answer is, here's the answer. Positive theta is true, but the answer is, and I'll just illustrate this real quick. If I put this at the money, 66.40, here's how you get probabilities in your favor. If we pay 650 and we hold it till expiration, right? So we're going to hold this to expiration. Expiration is October 10th. What's an expected move till October 10th? Can someone read me this number on Thinkorswim? What's an expected move for till the expiration of my short? What's the expected move? 142 points. So if we move 142 points up or down from at the money, right? 140 points on the downside would be 65.10. 140 points on the upside would be 67.80, right? Way up here, right? The point is, if we held it to expiration, because there's a lot more opportunity over a longer period of time to move, is the probability that we're going to be that we could be quite a bit outside our break even. Does everybody see that? There's no edge there at all, right? There's no edge there at all, right? So what I do is I look at the this trade and say, what, how long did I say I would be in an Oct 14, an Oct 10 calendar? How long did I say I would be in an Oct 10 calendar? How long in a 14-day calendar did I say I would be in it? 14-day calendar, 30% of the duration, 4 or 5 days, right? So if you look at 3 or 4 days, is 60 points, right? So if I'm only going to stay in this, let's say 4 days, right? If I'm only going to stay in a calendar, this 14-day calendar, if I'm going to stay in it 4 or 5 days with no risk management whatsoever, can I handle an expected move, right? Can I handle a move of, can I handle a move of 60 points on this trade? And you'll see absolutely 66.40, you can handle a move, right? Because look, if I'm at the money 66.40, if I go down 60 points, 65.80, I'm within the break evens. If in 4 days, a 60-point move to the upside, can I handle that? Yes. So how do you get the probabilities in your favor with calendars or any type of trade? You get it in your favor by staying in it maybe 30% of the duration. So I hopefully that helps. We'll call it right now. If you have any questions on trades or things you want me to cover, I'll probably come next Friday um, throw them in there and I'd be happy to help you. Thanks everybody for coming into today. And I appreciate it. Thanks everybody.